I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market crept its way higher over the last week, though declining volumes seem to indicate buyers might be getting tired. Still, 4 out of 5 all-time highs really looks more like a seller's strike. It's definitely an investor's market and really a tough market for traders who really need volatility to have their best days. Monday brought the best gains of the week as a carryover buying from last Friday's very strong employment numbers brought buyers in with an upside gap in the morning. And that S&P move brought another all-time high as a 40-point big move to the upside on that day. Tuesday, stocks stalled as there were questions whether President Biden's infrastructure plan could get passed. A modest afternoon pullback left the stocks around unchanged on the day as it was quiet again and traders were waiting for the FOMC minutes that were coming out on Wednesday. Wednesday also started the day quiet, and that's really the tone for the week as there was barely any movement intraday. And the FOMC finally did come out and said no change in their policy, which is really what was expected. Participants noted, and I quote this, it's likely to be some time before further substantial progress is made in the committee's maximum employment and price stability goals. Well, price stability, you got to go back to Jekyll Island to decide what price stability means. Now, to me, price stability means prices don't move. Isn't that what stability means? But somehow the Fed has established that price stability means that we have to pay at least 2% more for every single thing every single year. So it's really a question about what price stability means. Somebody ought to look that definition up and tell me if stability means stable or stability means up. Well, that question just resonates in my brain. Fed Kaplan did come out and he said he's worried on excessive risk-taking in the markets, which shows that, well, somebody may be paying attention. The market did move up slightly as the upside drivers to the move on Wednesday were the revived tech stocks and stay-at-home stocks as there's another surge going on in COVID-19, especially in the overseas countries and some areas in the U.S. Still, in the U.S. here, the cases are thankfully way down, and that seems to me that the COVID situation, though still a very important and difficult situation, is starting to really get under control. So I think that this revival of the stay-at-home stocks will just be temporary, and we'll be seeing them moving to the downside again. Thursday, the ECB came out and shared the same dovishness as our central bank here, and the markets drifted higher all day long. Powell came out late day and said, inflation is not an issue. But then Friday, China came out and said, inflation is the hottest they've seen in many, many years. Their PPI up 4.4% year over year. And indications were that they will tighten. So the China market fell Thursday night, Friday morning, down about 1.5%. And that had our market stalled a little bit. But then, of course, buyers began to come in again. And that was in, those buyers came in even with the U.S. PPI coming out up 1%, year over year up 4.2%. That is the biggest annual rate of gain for the PPI since 2011. So again, you've got to look to Powell and say, is this what price stability means to you? Wow. But still, with that news, the stock market's strong, and as I'm recording now, around the midday time period, we're looking at the S&P 500 up about 9 points, and the NASDAQ, which was down pretty good, has moved back to the upside also. So here on Friday, the market's firm. The S&P 500 reached our upside target this week, and I'm going to show you that as we get to the end of the show. And that's ahead of schedule, as we thought that the market would do that, but it would do that a little bit later, maybe May or early June. But this market has been just extraordinarily strong. By every measure, the stock market is drastically overpriced. And it's no secret to anybody, all the investors out there, and I've shown you several different charts over weeks and weeks and weeks that show you how just historically overpriced this stock market is. Well, here I go again. Yesterday, my good friend Tim Knight, and he's got the great site Slope of Hope, he put out a tweet that caught my eye, and I wanted to share that with you, as he was talking about the price to sales ratio for the stock market. It's another very, very good measurement. And it's now at 3 times sales, historically. First time that we have ever seen anything like that. And I'll give you a little peek at that chart so that you can see right over here, S&P 500 price to sales ratio. Now, 3 times sales. If you look back at the 2000, way on the left side of that chart, what you'll see right over here is when the stock market peaked in 2000, it was at about 1.8 times. If you look over here where it peaked over in 2007, it was about 1.6 times. And here we are way up here at 3 times sales. This is from multiple.com, where they have a lot of this ratio and chart information. You could see the mean, the median, the minimum, the maximum. Well, the maximum was in March of this year. It's actually got up to 3% right now. Today's the day it tags 3%. So not 3%, 3 times. 3 times sales for the S&P 500. That is just an absolutely incredible situation where we look at that, just an overpriced condition that is just mind-boggling. It doesn't really matter, though. I can show you tons of these things. It's a bizarro world that we're seeing right now. Yeah, that's right. Where everything is opposite. At least if it's not opposite, it's very different than what we've understood in the past. Nothing matters. The debt bomb doesn't matter. The massive amount of excessive government spending doesn't matter. Everything is just opposite. What used to matter doesn't matter. But right now we're in this period of blind euphoria. And when that's over, investors will wake up to the reality that the stock market can still cause great pain. Historic upside has always brought historic downside. That's really what we're facing, and I think it's coming in the second half of 2021. For the week, the Dow Jones Industrial Average is now up pretty nicely as it gains a total of about 1%, a little more. S&P, that's the Dow Jones, the S&P 500 up over 2%, the NASDAQ about 3%. As you can see, the NASDAQ has had a comeback, but the Russell has remained weak, and the Russell loses about 0.5% on the week here at midday on Friday. And you can see that the speculative areas of the stock market really are starting to struggle, and that could be a sign that we're getting towards the peak of this speculative burst that we're in right now in the market. Bond market had 30 years gain about a point. The 10-year yields fall about 2 basis points. Gold gains $13 on a nice rebound. Silver up about 25 cents, and that's after them having a soft day here on Friday, so they were a little bit better. We're really looking at a choppy time here for the metals, I think, over the next few weeks. And I'm going to be bringing some analysis to our members down in the next few weeks on the dollar market, because I think the dollar market is going to do better than some other people think. and the dollar loses about 0.7% this week, but I think it's going to be turning around and moving back to the upside, and maybe in a stronger way than other analysts are thinking. So my long-term analysis shows an important low getting ready to form here, and pretty soon I'll bring that to our members to see. Oil loses on the week about $1.70. And next week, I see risk in the market still. There's some support at 57, right around 57, 54.50 is the next number. If it breaks under that 57 level, it could fall as low as 54.50. I really think next week is the week where there is some pretty good sized risk in the oil market. And if it survives it, you'll know that it's probably in pretty good shape. So we'll just look for these declining prices we're seeing in the energies to continue for about another week. So that is it for the opening, and I've got some great stuff coming up in here for you to see, and some new things that we have never shown you before. So stick around and you will see that. There's that beautiful chart, and we'll just jump into the slide here that shows you what I'd like you to do right now. I want you to explore the askSlim website. Make sure if you're new to askSlim, you can become a free member, or I'll show you the deal we have for level 1 coming up right now. And make sure on YouTube, subscribe to this channel. Click the notification bell if you want to know when we put up one of our many videos every week. Make sure you give this video a thumbs up that you like it. And follow me on Twitter at askSlim for information on our memberships, our huge offerings on education and analysis. Write to Matt at askSlim.com. Our level 1 special that we're running right now is just incredible. If you've never been an askSlim member, this is a good place to start. $14.95 a month, or $10 a month if you take it by the quarter. You get the Slimulator Momentum Tracker, which is a really for investors or position traders, longer-term holders. It gives you our momentum analysis with our proprietary algorithms built in. It's an amazing app, and you will love that. You get our Stock Index Weekly Report, our Spider ETF Review Weekly, where it looks at major sectors, our new Trader and Investor Workbench, where you can organize or prioritize and save and track your analysis. The askSlim Market Week Show Archive, where all of these videos go in, and our askSlim Live replays, where you'll be able to see just a great 70-minute or so live show that we do for our members, and you'll be able to review that. And special videos that we put in there also. $14.95 for a month, or $30 for a quarter. If you've never been an askSlim member, this is the entry level for you. This is where you get in and see what's going on here in our website. So please do sign up. All right, so we have something special here today. This is an intro to our new international segment that we're going to be doing. Arvi does some amazing analysis on international markets, and we're gonna give you an introduction to that in just a minute. I'm gonna start it out though, because our level 4 members have part of their service is that they can request 2 charts a week from us. That's for the Thinkorswim platform, where we do our cycle analysis on there with all of our proprietary indicators that we use, all of our annotations. So if they ask us for something, we spend some time and build these charts for them with all that information. Twice a week they can do that, so it's a great service, level 4. The Euro Great British Pound, EUR-GBP, was just amazing when I looked at that, and I wanted to share that with you so you get a good sense for the cycle analysis that we do and the kind of information that you can get. Let's look at this chart now as we look over at the weekly chart of the EUR-GBP. Now, I do analysis on all of the key all the key Forex pairs, and looking at 6 different things in Forex in the Future Speak show every single week. And I don't do this pair here. I look at the euro, I look at the pound separately, but I don't look at them compared to each other. And look at the gorgeous cyclicality that is in here. On the bottom, if you're brand new, these are our cycle brackets. They show you essentially the rhythm of money flow is what it really is. And that's what cycles are. And our analysis is a really very objective visual analysis where you look at the movements in money flow. We use several different indicators to help us with that. And what you see in here are the great rhythms. So the low lines up here and here and here, and you can see that. And whenever the two cycles are coming down together, you're in a period of downside risk, as you see here, here, and here. And when a market is in a rising phase, it's when the two of them are moving up, and you can see here, here, and here, and here. Just beautiful. And something very unusual happened when you look at this one, and that is the rally aborted very, very quickly, and it actually broke that key level, and that turns it negative. And what it means is that this cycle is likely to decline all the way through the next nested low period, which is into September. So that means that rallies are likely to fail. Now, you'll notice there's a dominant cycle right here and a minor cycle right over here. And at the point of the minor cycle, you generally get another lift in the market. You can see that right over here where it began to go up. You could see this kind of really was very strong and then spiked up in the second cycle. This moved up in the second cycle, and here it is right over here in the second minor cycle. However, this is likely to fail because you have this negative pattern. So what we're looking at is the potential for it to get up over here around 87.70 and then fail and then come down sharply again. The probability of this being the ultimate low is very small. The probability of it failing in here and taking out that low is very high. So that's the cycle analysis on the weekly chart. I can now switch this over to the daily chart, and you'll see how we do the same kind of work on multiple time frames, and that's very important to this. So you can see what happened in here is that this cycle right over here brought you the exact movement it should, the minor cycle, and then the rally never came. This is one of the weakest situations you will ever see. On top of that, the slim ribbon, our key momentum indicator, and I'm going to present a lot on this at a coming event, and you can write to us for free access to the Wealth 365 event, and then I'll be sending you a link if you want that. And I'll be talking about momentum analysis in that special event that's coming up in April. So the declining slim ribbon right over here is very negative. On top of that, this is the slim ribbon PO giving you the signals for the momentum, which were extremely negative. Now you can see it's neutralized right over here. But this is that sell zone we talked about on the weekly, and this is likely to fail and then be moving down again. So this is a look at trading just one of the FX pairs. Again, like I said, we look at the euro and the GBP every single week when we do our Future Speak show, and this cycle analysis really speaks in here about quite a negative condition. The euro versus the Great British Pound, we would expect the euro to turn much weaker again versus the GBP sometime in the next couple of weeks, let's say, after a minor attempt at a rally. So I hope that was really, really interesting to you. So that's the beginning of this introduction to our new international markets coverage that we're going to be presenting to you. And I wanted to share more of this for you to see through a special preview that was created for you for this show, and you're going to get a great sense for what we do. What's coming up is this preview that Arvi did some great work, and he's going to show you this and tell you all about this.
International markets for April 8th, 2021. This is Arvi Ramachandran. Over the years, we've had many requests for us to do analysis on international markets. At the time, we did not have access to international market data. However, all that has now changed thanks to TradingView. Moving forward, we will use TradingView to share our analysis on international markets on a local currency basis. We will continue to use thinkorswim for all of our futures, US equities, and Forex analysis. So look at TradingView simply as a complementary solution to help us provide a more comprehensive look at markets from around the world. In this video, we will look at 10 international equity markets as part of our phase rollout of our international markets service. We will do this video every 2 weeks to keep you up to date on our analysis, and as part of the international markets service, Level 4 members can now send in chart requests for international stocks. And I will also be hosting a chat for our members through Discord so that we can have an interactive dialogue regarding any questions on our analysis and any trading challenges that you may be having. So definitely watch for this notification in the coming weeks. For the international markets video, we will look at both our weekly and daily cycle analysis and then review the forecasted timing across both time frames. We will start out east in Australia and then work our way through Asia and Europe and finish up with Latin America. One thing to watch for as we walk through these charts is the most recent key weekly lows that formed. You will notice that many of the key weekly lows formed right around the key S&P 500 low that formed back in the late fall of last year. You can use this kind of synchronicity as supporting evidence to your narrative. If you see many equity market lows due around the same time period, it can give you a sense for when to look for that next impulse on the upside. So with that, let's go ahead and get started. We will start with Australia and the S&P ASX 200. So this is our weekly and daily grid here in TradingView, with our weekly on the left and our daily on the right, and on the far right we have our watch list. So for this video, I just wanted to walk through what symbols we are going to be looking at. So we will go ahead and start with the S&P ASX 200, and then we will look at the Shanghai, followed by the Nikkei, and then the Kospi and the Nifty 50. After that, we will look at the DAX, followed by the CAC 40, and then we will look at the FTSE 100, and we'll finish up with the BovSpa and the IPC Mexico. So let's first look at the ASX 200 here and the weekly chart. On the weekly chart, for those who are new to our work, we have our weekly momentum indicator here, which is this red and purple line. When it's purple, that indicates negative momentum, and when it's green, that indicates positive momentum. At the bottom, we have our cycle brackets here. These are manually drawn on all of our charts, and they are simply a visual aid to help us to identify the money flow patterns. On the daily chart, we have our slim ribbon, which is a combination of an 8, 13, and 21 EMAs. When they are configured positively, you will see green colored candles to indicate positive momentum. When they are configured negatively, you will see red colored candles to indicate negative momentum. And when there is a conflict, you will see gray colored candles just to indicate neutral momentum. We have our short-term cycle brackets here to show the shorter-term money flow patterns. And lastly, we have our slim ribbon PO, which is a proprietary indicator, and it helps us to show the momentum continuation signals on shorter time frames. So now let's go ahead and jump into the S&P ASX 200. On the weekly time frame, we have a dominant weekly cycle here, which is then broken up into these minor half cycles. So we're saying that there is a clear dominant money flow pattern that is then broken up into these minor money flow patterns. And what I've done is I've highlighted how these dominant money flows have formed over time. And I just want to highlight them for you here for those who are just looking at these charts for the first time. So you can see the rising phase that formed here, and then the corrective phase that formed here, the rising phase, and then the corrective phase, the rising phase, and then the very mild corrective phase. And we have now very likely turned up and are in a new rising phase here on the weekly time frame. You can see that there was a little bit of a flag that formed here, and now our weekly momentum has now turned up here as well, which is giving us some clues that a bottom has already formed. We show the forecasted timing with these blue ovals. The forecasted low was due 329 to 517, and you can see that the low formed likely a couple of weeks early, and that is a bullish sign here as well for the ASX 200. If we shift over to the daily, you can see some further granularity here. You can see the daily cycles, so the short-term money flow patterns. We are setting up a very positive cycle here with a cycle low that will likely be much higher than the prior cycle low. And you'll also note that the slim ribbon is now getting configured much more positively here as well. So what we look for is just a mild pullback with these rising slim ribbons, right? And then a move back to the upside here in the ASX 200. The next short-term low is due 422 to 54. So let's go ahead and shift over to the next symbol. We'll look at the Shanghai. Okay, so this is the Shanghai composite here with the weekly chart having a dominant weekly cycle, which is then broken up into these minor half cycles. You can see that the Shanghai likely formed an early high in this dominant cycle right here, and then rolled down on the downside, which indicates that we are in this corrective period here on the weekly time frame. Now, note that we had a minor cycle low due right in the early March time frame. So what we're looking for is, given that we have negative momentum here, we would look for this to be a bear flag that would likely turn back down on the downside into this next intermediate term low timing. Now, the next low is due 5.6 to 7.19. So there is some time period here of heightened risk here in the Shanghai. What we look for is a failure in this intermediate 38.2 to the intermediate term 50. So that's 34.82 to 35.30. That would be the area that we would look for the Shanghai to fail in and then to roll back down on the downside. If we shift over to the daily chart, you can see that we are testing that zone that I just mentioned. We would look for this to roll back down into this next short-term low timing. The next short-term low is due 416 to 427, and then we will look for one more rally, and we will look for this rally right here to fail early and then roll back down and take out that old low. That's really what we would look for to give us some signs that this 33.15 level that I have on the weekly is really in play. You'd want to see this next rally fail and then roll back down early. So definitely keep that on the radar. The Shanghai is clearly showing some relative weakness versus the other Asian markets here. So now let's go ahead and shift over to Europe, and we'll look at the German DAX. So this is a super powerful chart. Why? Let's go ahead and walk through it. On the weekly time frame, you can see the large sell-off that we had with COVID. Then we formed this beautiful basing cycle with a cycle low that was higher than the prior cycle low. And then we got through that old cycle high, which confirmed the base and set us up for a much more favorable overall pattern. And you can see we really have just been blasting off on the upside with super strong positive momentum here on the upside in the German DAX. On the upside, what we're looking for is a test of this major 78.6 and this intermediate level here. So that's 15.541 to 15.802 prior to getting into this next corrective period here. For the DAX, the next key low on the intermediate term is due 525 to 726. Overall, a very, very positive pattern, and we would look for new swing highs to form here going out into the late summer and into the fall. This is a very positive pattern still in the DAX. If we shift over to the daily chart, you can see these long daily cycles with this dominant daily, which is then broken up into these minor half cycles. And what we have here is, I just wanted to highlight this because this is a pattern that you will see quite often, is you have this bull flag that formed, and I've highlighted it in blue, with a mid-cycle low due, right? So you have a mid-cycle low, a bull flag forming, and you would look for an impulse back on the upside because we have this very positive slim ribbon, which indicates that we have very positive upside momentum. So you have everything lining up here, and this is really an ideal opportunity to watch for as you're doing your own analysis. So what's going on at this point is that we are forming one more swamp cycle where we've used up this whole cycle rallying. As you can see here, it leaves a short window of time for a little bit of a pullback, and then we look for a move back to the upside. On the downside, we have this intermediate 38.2, which comes in right at around 14,980, down to around the intermediate term 50, which is 14,878 or so. That would be the zone that we would look for on the downside into this next short-term timing. The next short-term low is due 414 to 54. Overall, a super positive pattern here still in the German DAX.
So that was 3 of the 7 different countries that are covered in the video that was just presented to you. Please do become an askSlim member, level 2 or higher, if you want to see the rest of that video and get all of the other countries that is going to be presented to you, to our members, every 2 weeks. You'll be able to see the updates on the international market. So that's the introduction to that we wanted to bring to you. Again, if you want to become a level 2, 3, or 4 member and get that full video, please write to Matt at askSlim.com and ask him for what our specials are, our best deals right now for the membership. So Matt at askSlim.com. Great work by RV, my protege, and every bit as good of an analyst as I am, and you could see that as you looked at that video. So kudos to you, RV. Great work. All right, so let's take a look now. We're going to do a little switch here as we look at the U.S. stock market, as we look at the SPY for the 1 to 3 month view. For the stock market, we're in a historic rally. The amount of rally is just absolutely huge. And I say that because when I look at some of the short-term conditions in the market, one of the key things that I look at on a short-term basis is the distance between the 13-day moving average and the price. What percentage is it above or below? Recently, I put out a video that the S&P 500 had come up to close to 3% over, and that's backed off a little bit based on a percentage basis. The NASDAQ is now approaching 4% over, which is really an extreme, and then does bring you some at least minor corrections. We're looking for a minor correction over the next week, but still we don't think that the ultimate move in this market is over yet on the upside. Take a look here as we look at the S&P 500, and you will see that we're looking at a cycle chart, very much like I showed you as we looked at the Euro GBP earlier in the show, or the 3 sets of charts that RV presented to you in the international markets. This is cycle analysis. You can see that big megaphone pattern that has been forming, and you can see the rhythms in here in the market. So the correction we looked for in here was only a measly 5.8%, though it was 11.2 and 12% in the NASDAQ and the Russell. And that 5.8% is really mild. You can see this one over here was 6% in that same corrective zone right over there. Yet the COVID panic was 35% right there. So the next big period of risk isn't until way out over here in the summer. What that really says is that what we're going to see is some continued upward movement. Now, our target in here was between 406 and 411. And here we are right now as I speak at around 409.30. The rally in here now is about 5 weeks old, close to 6, and that's not very old. Most of these rallies last considerably longer than that. That's why we had projected for this rally to continue out through May and maybe June, out into this time frame out over here. And then there is one of these minor cycles right over here that will give you some kind of a correction. Right now we're looking for only a little dip, and the dips normally on the daily patterns are around 2.5 to 3.5%. And that could come, and we think it's coming in the next week or so, where the market gets a minor dip, but really not likely to give you a whole lot on the downside, and it's probably going to be going up again after that. You can see in here those fib confluences that come off of these cycles back over here, and the bottom of this upper one is at about 423 on the SPY, and that's that upper track that we're showing you right there, and that is still quite a good possibility. So ultimately, we're looking for these upper targets, 423 to up here about 433, 432. That's really what we're looking for as the ultimate peak to this bull move. The only way that would change would be if it fails in here at 411 and then gives you some bigger declines. Right now, the support's right in over here. We don't expect it to hit around 395 until a modest dip here that we're looking for out into May. So right now we're just going to be looking for a choppy area right in here and some consolidation, some minor pullback, maybe 2.5 to 3.5%, and then be finding its way up again. And you can see as you look at these patterns how dependable they are. And then that out in this area over here in the summertime is where I think is the beginning of some of the very significant downside risk periods that we'll be seeing. So that's a little bit bigger picture. We want to stick in this 1 to 3 month period, and this 1 to 3 month period to us looks like it will only have minor dips that will be followed by advances again. Were it to get worse than that, well, it would become very clear, and we would let you know. In the meantime, this is a very strong pattern. You can see in here the momentum indicator, even through this modest declining phase right over here, was never turned negative. This is still positive, and momentum still remains positive. Momentum is positive on all time frames in all of the indicators except for the Russell, which is the one that's stalling. So market exceptionally strong when we look at that, and it continues to indicate that modest declines will be likely. Maybe even some shakeouts, 3%, 3.5% might scare somebody, but we think overall it's not going to be able to have anything significant on the downside until we get past this peaking period out in May and June. So that is a look at the stock market 1 to 3 months. I hope that's helpful to you. Remember that we do Future Speak on Wednesdays. That's when we look in depth at all of the indexes and the futures markets. That's for level 2, 3, and 4 members. So if you're accustomed to seeing us present gold or silver or those things in this show, we kind of mix it up right in here, but we bring all of that in depth to our members every single Wednesday. So please do become an askSlim level 2, 3, or 4 member to get that information. And you'll get, of course, over 500 videos that we've recorded for your learning, entertainment, education, and all of that. So that is it for the show. I do want you to remember that we have, if you've never been an askSlim member, please do become a level 1 member. It's our entry level. You get all of this great information in there. If you $14.95 or $30 for a quarter, you'll really get a sense for the things that we bring you. The momentum tracker is mind-boggling. It's so good. And also, please do go to the askSlim site and explore that site. If you're on YouTube watching this, please do subscribe to the channel, like this video, give it a thumbs up, and watch some of our member videos that we have in the playlist from past shows that we posted up on YouTube. Follow on Twitter at askSlim. And any questions on membership, do write to Matt at askSlim.com. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.
I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been crazy.